Can you just give like a general tip? It doesn't have to be Bible, but a general tip on how someone who is nervous with all of this chaotic news coming out, how can they quell that nervousness and not panic and not be so fearful?
That's an excellent question. And so, I, as an advisor, I manage expectations out the gate. And whether it's my seasoned clientele or a newbie clientele or $25 or 25 million or institution, I try to manage expectation. Sometimes this works. And fortunately for me, it has worked more often than not. And occasionally I have to reinforce it with clients. And I'm more of a behavior coach. I'm more coaching and reinforcing even the real astute clients. I'll move in. I tell folks I should not have majored in econ and finance. I should have majored in psychology because you got to understand people's psychology. And when you understand, that's why we use something called behavioral finance. And you need to personalize your accounts and understand what your personal risk is. So that's my advice. Know what your personal risk is. And when you think about risk, there's two ways to think about it. Think about pain. How much pain can you take when you're seeing that thing go down? So get an image of that. That's pain. And another way to think about risk is, let's say you at home and it's cold and the temperature outside and the weather man is constantly talking about how cold it is going to be. And if you're the kind of person that got to hear the news person, the meteorologist constantly saying, man, we're going to be a freezing. You got to keep hearing that. Well, 9 times out of 10, you're doing that in your statement. You'll keep looking at your statement 9 times out of 10. And so if you're like me, you're going to set your thermostat to whatever temperature you want it to be. And you don't care how cold it get outside because you know your boiler is set for 73. And the boiler is going to go up and down, off and on. And I don't care if I don't even turn the news on. I don't care how cold it is. My house stays at 73. Okay. And so that's what your risk score would do for you. When you know your risk score, that professional is going to manage your portfolio and keep it within a standard deviation. That's the up and down high term. That's a statistical term for those who remember stats. It just moves plus or 5 points, plus or negative in a certain way, whatever standard deviation is going to be. And now you still look at your statement. I advise that, but you're looking at it with understanding. And now you don't hide and duck it. Same thing if you're in debt, don't duck the debtor, don't duck the call, take the call. Take the call and work out an agreement with the debtors, if you will. And so, ducking and sticking your head in the sand, although ostriches don't actually stick their head in the sand, but most people say they stick your head in the sand like an ostrich. No. Open that thing up, look at it, get understanding. And then with understanding, oh, he or she said this was going to happen. Wow. Okay. I'm okay with it. I see how much it's gone down. I can stomach it. Then you put your shopping list together and you're looking for buys.
Listen, I loved how you explained it using the boiler analogy. And it is so true. Like, what difference does it make what the weatherman is saying the temperature is outside, as long as you have your thermostat set to the temperature that is comfortable for you and your thermostat is working, right? That's similarly, right. Your financial advisor, as long as you have someone who you can entrust and that doesn't change, then you should have a level of ease. And that's why Hakeem was talking about, even though, the theme of this program is DFS, do it for self. It's not you picking the stock for yourself. It's you taking control by making sure that you hire someone or who you are with a company that can help you stay within that standard deviation that you were talking about. And so I'm going to get to Ms. P's question now, but after Ms. P's question, can you just go more into the do it for self platform that you kind of started talking
Absolutely.
about?
So the do it for
Wait, let me
self-security.
ask Ms. P because she asked this, so I want to make sure she's still here.
Oh, this question. Okay.
And I think you know Ms. P.
Yes, absolutely.
Yes,
I
okay.
do. Absolutely. Is investing in indexes safer and more profitable overall than individual stock market? Also mentioned Reese before. What do you think of funds like Fundrise? Okay, excellent questions. So, indexes allow you to diversify yourself with little money. So indices make up. So let's take the S&P 500. That's 500 companies within the U.S. and a diversified group of companies. Home Depot, Intel in days of old, Coca-Cola, IBM, Meta, Apple. So an index gives you a basket, if you will, of 500 in this case of corporations, and so you can put $100 and get well diversified, and that's giving you 500 different corporations. So that is enormous diversity for little dollars. In stocks, if in days of old, if you only had $50, you couldn't build a diversified portfolio. You barely could buy one stock. And so they came out with mutual funds that help people to do that. Then they moved to ETFs, and they have a whole bunch of different type of baskets of portfolios. So the risk is still going to be there, but you're diversifying yourself. It's no saying my mother used to say, a rat with one hole is a poor dead rat. But a rat that has multiple holes, well, he's going to live a little longer. And so diversity, if you're buying one stock, you got to be right. I mean, that's enormous. You have to be right all the time. If you have 5 stocks in a basket, or if you have an industry that has 50, or NASDAQ that has 100, or Dow that has 30, well, geez, you don't have to be right all the time. You got 30 other, 29 other. If you got Dow 30, you got 30 in it that can be right, and they're balanced off. You got 100 in the NASDAQ. You got 500 in the S&P. So those, the odds of all 500 or 30, even in the last few days, all of them weren't down at all times. But ultimately they did, and then they moved differently. As far as Fundrise, I don't do a lot of work with it, but I do understand that it is an investment platform. It allows you to get into real estate, such as the REITs. It allows you to get into venture capital and private credit. That's another platform that is available to try to give people access to that. We give people access to that as well through our firm. So if you're interested in REITs, if you're interested to sidecar in private equity, if you're interested in credit markets, we give our clients access to that, and we do it at the institutional level. Whether it's BlackRock, whether it's Goldman, JP Morgan, Blackstone, we bring all of that to our clients as well.
So I have a quick question. I'm gonna be a little selfish because I haven't asked the question yet.
Go for it.
And it kind of goes in with what Ms. P was saying. So for those of us who were so ride a DIE for Apple stock, right?
Yep.
And understanding their production challenges with what's going on with China, like 80% of their production happens in China or something like that. And this is, for your recommendation, not saying you're telling me what to do. So I just but what do you think of Apple stock for now, or actually where it's going, like where the puck is going?
Absolutely. Excellent question. This is one, I literally, during Co-op City days in 181, that's when I started my research on Apple. Because you may remember where others probably was misfortunate, we were programming in 181 back then, and we used an Apple computer, and we was doing basic programming then. And several teachers, Mr. Cassie and others, was trying to help me to become a better student. And so they would use sports and business to make connections to things for me. And that helped me. And as we were programming, just basic stuff, putting programs in to say hello, good morning in that class, that was an Apple computer. And so when Apple finally began to do a lot of work in the education world, that clicked for me. And then when it came public, from $8 all the way throughout, I still do a ton of research on them. and in and out of that stock consistently. But specific to your question, which is a great question, yes, they have a tremendous challenge. That's why you saw them down during the last few days, because of their manufacturing with Foxconn and others in China. And then when people hear tariffs, they're just thinking a percentage, but you got to think beyond percentage. You got to think treasuries, what's going to happen to treasuries, what's going to happen to currencies, what's going to happen to patents, what's going to happen to access to markets. Governments can say, we don't want you selling these things. So Apple is impact across the board on all that. And so they started to move some things to Vietnam, but the president made sure he closed that gap because he learned from his last time that he didn't, and they backtracked and came through Vietnam and was able to bring stuff through. But pieces we're going to get on tonight, next week, we want to use the Virgin Islands to take advantage of this. If companies put their manufacturing in the Virgin Islands, you have the same portals of ports to get to all of the places they're going now. The Jones Act is not going to be a negative impact on them. At the highest, your tax rate would be 4% because they're reducing all taxation there. They have an intellectual bunch of employees there. You have a lot of pharmaceuticals being built out there. So you have the marketplace, you have the climate, you have the access. It's US. And so one of my advisors was just there in St. Thomas, and God willing, I can get there in the next couple of weeks myself. Hopefully St. Croix, and get on the ground and look at it. So Apple, I would put a pause on as my final thought. I would put a pause. I would know where the lows are on support. And just like the shoes, if I know that shoe is normally worth $500 and now it's now $50, guess what? I'm buying it. I'm just buying it, and I'm holding on to it with a long-term thought in mind.
Okay. Thank you. Thank you for that, because I am deep into the Apple game.
So every time that thing drops, if you have a long-term, and if you work with us, we do the work on it. We can share with you where those support levels are, where the lows are, where the previous 50 to 20, 20 to 50 to 100. And then those will be good entry points to look into. And then you just acquire it and move forward. You wait.
Thank you.
Yes.
Okay, so Christine wants to know if you think Ron DeSantis will be able to get rid of property taxes, or is this a pipe dream?
It's very likely. Florida have enough voters that don't like property taxes, and they understand the benefits of getting rid of property tax. So I don't know if it's a pipe dream. Donald Trump is speaking about getting rid of taxes in general,
right?
And that's not a pipe dream either. So we didn't always have taxation in this country.
And I think Florida's what you call it, a petri dish, like it's a test pilot for a lot of these bigger.
Florida and Texas always.
Yes,
exactly. Georgia sometimes too, but definitely Florida and Texas.
So pay attention to what starts in those states to see maybe where the hockey puck is going. As Hakeem, I
think the red days are over, meaning I don't, but one of the that the market's going down. I don't. One day doesn't make a trend. So I don't think if you're meaning red, meaning down, I don't think the down days are over. And one thing about institutional investors, they hate losing money, and they lost a lot of money today. They gave back a lot of they gave back just about all their profits. So here's another thing. Most people listen to media and say it tanked, it crashed. People lost money. Well, no. For every up long buyer, you need someone to sell that to you. So that person's a seller. And if you go in long, they want to go short. And if you go long and make money, well, the short lost money. And then the reverse happens. You don't always make money going up. I was short in the market going into tariffs, and fortunately, we made money. And so you can make money when markets go down, and that's what we call shorting or putting a put if you're buying options. And so when the longs make money, the shorts lose money. When the shorts make money, the longs are losing money. So it's not like the money just gets shot up to heaven somewhere and it vanishes. It's going from one hand to the next hand.
Right.